Good morning, everyone. How's everybody doing this morning? Good, good, good. I'm good. I'm good. Markets are nice and predictable again. We were looking for some backfill during the evening, and that happened. I left the I left the Sunday night profile here, so you can see that big area of single prints, and you can see that the early bird got the worm. All the cheap supplies gone, and yeah, a little distribution up here now. Fairly normal market action. Overnight inventory was short. It's now trying to get long. I think we have a poor low, if I'm not mistaken. Let's go take a look. Yeah, overnight low is a poor low. Buying competition there. Those are the single prints from Sunday night, or actually Monday morning, early Monday morning. And yesterday's lows here. So when we broke yesterday's low, there was a whole bunch of short covering, and I used that for my cost basis. So yeah, now let's see where we could take some trades. We are correcting inventory. We did a look above and fail. We went to 8 times profit on this cost basis, and now we've put it on sale. So looking at if we stay under 66.40, we should come back down to the close of yesterday, which was at around 32. Yesterday's cost basis is right here as well. So let's see what happens. Not really sure longer term, because we had such a large move yesterday and then a backfill. So this was the move up. We took this inventory, we sold it. I'd like to see a move back down to 65.60, 65.47 in RTH. If that doesn't happen, I think we're going to go sideways and then back up again, depending on the news cycle, of course, right? You're on your third coffee? I'm jealous. Oh, I'm only allowed to have like one. Welcome to the folks on YouTube. Good to have you here with us this morning. I'm JJ. This is the tradingsyndicate.org. And we are here to try and help regular people make money with common sense trading. It would have been a nice short at 47. Heck, even 44. Let's see. So we're coming down to the point of control from yesterday, which is where, geez, these charts are all messed up, because of this, these moves lower. Phew. Hate to be an analyst in this market. Yeah, that point of control is right here from yesterday. So that is where the majority of yesterday's cost basis is. So we might kind of slow down a little bit in the 35s. A little bit of short coverings coming in here at 38, 39. Let's see where the sellers are, right? So they slowed down. So the first thing that you want to look at when a market, after it sells off, and then it sort of finds a bid. Now you guys know what I'm talking about? If I've lost you, let me know. So a market liquidates, and then it kind of finds a buyer, right? And it starts doing this. When it starts doing this, what you should be thinking about as a trader, if you're not in a trade, right, you should be wondering where are they going to sell into it? That's what you should be thinking. Not, oh, I should buy it and it's going to run up. If I do buy it and it runs up, where are they going to sell in it and ruin my party? And you can see they're selling into it right at the top of that candle. That's where they initiated, and they'll initiate again if they have size. Now, someone was asking me, JJ, how do you know this? Well, it's because I've been the one selling at the top of the candle. Now, do you see how this green candle came and it couldn't get to the top of those candles? See how the offer is lower now? So they actually started selling before, right? Now they caught a buyer, they go through. So you just watch this and you see, okay, so they saw buyers. Now watch the next top. Right? So this was unpredictable. So that's why I wouldn't have automatically gone long. Now, if you're a fast trader, if you see things like the lows of the candles getting higher, you can buy a little bit. Like say you had gotten long at 38 or 39, you could put your stop at the bottom of these candles. But you got to be quick, and then you've got to sell into the strength really quickly if you are fast enough. If you're not fast enough, don't do that. Now, full disclosure, sometimes I'm fast enough, sometimes I'm not, you know? So if it's the first trade of the day, don't try for like really fast trades when you're just starting out. You could, you could, exactly, Moran, right? But you got to be quick, so you'd be buying the 38s, stop at 37, selling 39, 40, 41, right? And just as quickly as it went up, it's going to come right back down. So your execution, your window of execution is 2 minutes, minute and a half, 2 minutes to get your business done. So can you execute that quickly? Great. Take the trade. If it's your first trade of the day, like me, I haven't traded yet, yeah, I'll wait. There you go, Moran. Took the words right out of my mouth, right? So you're better off doing that kind of trade in Globex, where it's a little bit more, the order flow is a little bit more reliable in Globex. And it's a little slower, so you don't have to be as fast as you would in RTH. That's very good, Moran. What's up, Raj? Mechanics of the rebid. Sorry, could you expand a little bit? Yeah, it's just that we were expecting a seller here and they saw buyers, so they raised price just for a minute or two. It's happening here again. Now, if I was going to take a trade here, let me see. Say I'm buying, maybe I'm looking for a look below and fail of 40 and 3/4. So I'm going to buy one here. Where did I buy? I'm long one at 41. Uh, and I think I'm early. Yeah, I'm long one at 41. And I'm going to put my stop just underneath 40 and see if it works. If it doesn't, it's not the greatest trade. I'm too early. I should have waited for this candle to close. And I'll get stopped out on this probably. So what I'm trying to do is I'm trying to do the look below and fail of 40 and 3/4. But I'm way too early. I'm flat. So I took the trade, got stopped out too early. Right? I know there's sellers here. Now I see there's a seller at 40 and 3/4. Now I know why my trade didn't work. Let's see. Yep, there you go. There we go. So now I'm just going to wait and see if we can clear the tops of the 42s. I might pay a little bit more. Give it another 10, 15 seconds. And I want to buy, I'd like to buy, between 41 and 43. But it's got to hold 40 and 3/4. That's what I'm looking at right now. I know there's a seller here. There's sellers here for sure. So if I go and I buy 41, 41 and a quarter, I'm going to put a sell order at 42 and a quarter to see whether or not I can get filled. If I can't get filled at 42 and a quarter, I'll move it down to 42 and see if I can get out. So I'm out one at 42. I'm long two more at 41. And I'm selling the 43s. I got one left, and I got a 43 and a quarter offer out, and I'm not getting any love at 43 and a quarter, so I'm going to move that down to 43, and I'm flat. Done. So you'll notice the first time I got stopped out, and I used that information, that was just with one contract, right? That was one contract I got stopped out on. I was too early, so then I waited, and I got back in again, but this time I was a little quicker, and I knew that I'd have to be fast and get in and out quickly. So I bought three, and I sold one right at 42 and a quarter, and that told me, oh, there's buying. So I could sell my other ones a little higher. Does that make sense? Do you guys get that? Cool. The first trade was like a warm up, you know? The first trade I was kind of like dozy. I jumped in, right? I wasn't really dialed in. That first trade, so I got stopped out. It's kind of like when you get slapped in the face, like, wake up, snap out of it. Okay, all right, now I'm focused, right? So you use that first trade when you get stopped out to kind of get more focused. And that's really what our method is. It's using, when you get stopped out, you use that stop out to help you take better trades. It's really all it is. Today at 11 o'clock in the ES room, 11 Eastern, we are going to have a webinar on adapting when markets change. Okay? So all of you who are watching us on YouTube right now, if you're interested in learning how to adapt your trading when markets change, right? And a lot of you may not know that markets change, but they do change, right? Because agendas change. And do you guys know that agenda affects order flow, right? So agenda affects order flow. When the agenda changes, order flow changes, and you have to adapt. We all have to. So how do you do that? Come into our room. We're having a 3-day trial. Give it a shot. See if you like it. It's 3 days. It's not going to hurt you. And even if you have to pay for it, it's only 19 bucks a month. And you'll actually learn how to do this. And we charge very little a month because we know people take time to learn. Okay. Just chop, right? It takes time. It took me 4 years to even figure out. This is after being an institutional trader. It took me from 2012 to 2016, and I had no guidance at all. Other than watching the market profile webinars. I went all over YouTube and I was listening to all these people and I'd like watch them for a little while and went, oh, this guy has no idea what he's talking about. This guy has no idea what he's talking about. It took a while, and then to put something together. And then what I realized is, oh, what if I use my old work experience and combine it with this? But the trade setup was the hard part, right? The trade setup and the discipline to do the same thing every day. That was, oh my God, it was horrible. Discipline was brutal. And that's why I came up with that 5-step method. We do the same thing every day so we know when our trade shows up, we take it. If that doesn't show up, we have no interest in participating. If the way we do business does not show itself, we don't take the trade. This keeps from overtrading. This keeps from getting stuck in the, oh, I blew up my account, I blew up my evaluation thing, right? All that just flies out the window when you have an established method of doing business. It's really cool because you don't have to, you don't get suckered into all these bad trades. Very important. Very important. Otherwise, you just end up, basically trading in the dark and just taking the absolute crappiest trades because you have no clue what you're doing. So come into our trading room. We'll teach you. Right? We'll make it worth your while. Let's see. London's going to open in a little bit here. Do you see inventory from 36 to 38? Yes, it is a little cost basis. It is. It's a little distribution cost basis. Moran, you're on the ball this morning. I tell you, there's something in your coffee, right? See? Yeah, it's good. It's good. I'm really happy. As they say in Canada, now you're cooking with gas. I thought you maybe had some special Dutch coffee that's really working well. I'm on the hunt for a good coffee brand. Ugh. My girlfriend has one of those Nespresso machines, but man, that stuff tastes like it feels like I'm drinking a chemical factory. All right, where's our next seller? Up here? Do I consider the placement of the POC within the value area? I do, but not for trading purposes, really. I just want to see where the inventory is priced, Meek. So I see that, we came right back to it and slowed down, stopped, caught a bid, and then right back up. So I know that we are distributing this up here. That's all. So I'm a market profile guy, but my whole thing about market profile is it has to be practical. Because unfortunately, the market profile people, and I love them sincerely, but they overcomplicate stuff and they don't tell you where to take the trade. So I use market profile kind of as a map of the city, right? And then if I want to trade in this neighborhood, I go in and I zone in, like with a microscope, how you flick the lens and you zone in here and you use the candles to actually take the trades. So market profile is great. It tells you where the shorts are trapped. It tells you where the longs are trapped. It tells you very quickly where the inventory is, right? You could see that we are above the inventory for the evening. So we're in distribution. So you could trade distribution instead of looking for a huge short. Does that make sense? So the overnight point of control is here. So the cost basis of the overnight is here. The cost basis of yesterday is here. We are in distribution above. So when price is above cost basis, you kind of want to look for longs. When price is below cost basis, you want to look for shorts. Does that make sense? Everything we do with market profile has got to be practical because unfortunately, traditional market profile teaching doesn't teach you where to take the trade, right? And it's very obtuse and very sort of academic. Whereas my train of thought is, well, you know what? You got to know what you're doing. You need to know where to take the trade, where to put the stop. Does that make sense to you, Meek? Yep. He asked a question and disappeared. All right. What clues would you get to direction? It's right here. If you're just joining us for the first time, I've done about 400 videos on YouTube. So what we do is we do a trade called the look below and fail. When the market goes from one cost basis area to another and then comes back in, we look to go long. We have a place to put our stop and then we sell into strength. Right now it's a little choppy, but let me show you an example of this. So this is a look below and fail. So the market goes up, goes from purple to green, back into purple. You buy this here, put your stop here, sell into the strength. So how do you know about direction? Are you in distribution or accumulation? If you're in distribution, what would it be? You're only getting confused because you don't have enough experience with it. It's just a time thing. That's all. It's just like learning how to ride a motorcycle and then learning how to do a wheelie on a motorcycle. Right? When you first get on the motorcycle, you're kind of nervous, blah blah blah. It's just a time thing. You do this every day, you do the same thing and understand inventory because listen, we're one of the few people who talk about inventory. Most trading rooms don't even understand what inventory is because they've never traded it, they never owned it, they never had it, right? They trade 100 shares of a stock or maybe two or three ES contracts. But when you've traded millions of shares of stock, you understand the concept of inventory accumulation and distribution. That's what markets are. So all you need is a little experience. It's not a big deal. Everyone is confused knowing of a range. Generally, accumulation is after a sell-off, right? It's real simple. Accumulation is after a sell-off. Distribution is when you go higher. Just think of this as a chart of the sale of televisions, right? So Walmart buys TVs at a certain price, right? They buy, say, 20 container loads of TVs from China, maybe $200 a TV. Then they take those TVs, they put them in the store, and they sell them for $1,000, right? And they're making sales. Everything's going great. Then all of a sudden, another competitor comes and lowers the price. So now Walmart has to lower the price, right? That's exactly what's going on when we came from 66.53 down to 66.40. We lowered the price, and it brought in buyers. Like, hey, folks, for 20 minutes only, Samsung 55-inch TVs are on sale. So people come in and buy, right? It's just a sales chart. The POC moving down means we are going from distribution. Okay, so say the POC moves up, right? The overnight point of control is here, trade maker, right? Then we sell all this cheap crap up here. You get it? Now, once we sell all the cheap crap that we bought at 96 up here at 45, we're probably going to have to put it on sale, right? So once again, we'll use that store reference. This is where you load the stuff into the trucks and you drive it to the fancy store and you're making sales. But then what happens? You run out of buyers and then it'll move back down when you have to put it on sale and take it to TK Maxx. And then the point of control will move up and then it'll move back down again. Exactly, Moran. Unless there's a bunch of shorts that are trapped, then the point of control never really has a chance to move down again because the buying just keeps coming in. Good questions, folks. It's really good. Now, London is opening 4 in the morning in New York. Oh, there's that seller. I've tried doing that, trade maker. I'll say, we're waiting for the point of control to move down before taking along, especially if there's a big liquidation. I do like to try and wait. Sometimes it doesn't, though. Sometimes we don't get the chance to move it down. So because of the order flow, maybe there's too much buying, right? Or sometimes there's too much selling, and the point of control never has, like, on a trend down. It'll take a while before it moves down. Like here, it opened up here. It took a while before the point of control moved down to 96, where you see that accumulation, right? Yeah, the market profile guys, because they come from the statistics background, they kind of use language that's a little bit more complicated than it needs to be, right? And I say that with the utmost respect. Sometimes they overcomplicate this stuff. They talk about value areas and unfinished business and all sorts of stuff that doesn't need to be talked about. All they need to do is say, look, this is where they're selling, this is where they stop selling. Hey, hola Juan. ¿Qué pasa? Exactly. Sellers. No, 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 no. Sellers never exit their trades and inject a buy order. That's the quickest way to lose money. Right? No, no, they'll never. We'll never do that. Right? The only time that you will exit your sell orders and inject a buy order is if you own every single piece of inventory, like in a stock where you own all the stock. But you'll never do that in a market where you have competition. If you sell, you always have to sell. Sometimes you will sell at a loss. That is just how business works. Yeah, Howard, we spoke about you shorting, right? That's a conversation I think you and I have had about 20 times, right? Because we were trying to end your suffering. No problem, Meek. Exiting a short is the same thing as a buy for a short seller, but it's different if you're a wholesale long. If you're a wholesale long, you have to keep selling, right? Because you got size. Now, sometimes wholesale longs will sell at a loss. That's just the cost of doing business, right? That's just the cost. Sometimes, you have inventory and it's marked at a certain price and there's a crap ton of selling that comes in and you got to lose your inventory before you lose all your money, right? That's just the market, right? Sometimes you sell at a loss. Like, I watch these guys in Miami and they're selling Rolexes on YouTube, and sometimes, they'll buy a Patek for 300 grand, which is, I think, crazy for a watch, and then they have to blow it out at 250 grand. And it's like, they take $100,000 loss, but they got to take that capital and redeploy it. And it's the same thing for us. It's just, it happens so much quicker, right? Stadelmeyer. Stadelmeyer is a very brilliant, brilliant guy, but remember, he is a stats guy, right? I, you know, for me, it's like, what do I really need to trade? Like, I want to have as much information as I need, but I don't need too much information because it clogs the brain and it gives me analysis paralysis. So I want to have enough information to trade, but I don't I don't need to have way too much information where I'm looking at 300 different things. That just doesn't work for me, right? And that's why I came up with this find the bid, because here's what we used to do in the old days, right? In the old days, what traders would do, I think it was a Patek Philippe or something like that, one of those fancy watches. Like, we'll short the market down to where it just won't go any lower, right? So what old traders would do is they short the market down and then they find the bid. That's where the bid is. Once they find the bid, they cover and they go long. And that's how we used to do it in the old days before all this fancy software. Now it's telling you who the bids are coming in, right? So that way we get a little heads up. Yeah, analysis paralysis is brutal, man. It's brutal. It's just, you know, that's why I'm a huge believer in simplicity. Simplicity is just, it's the only way to fly. So now we're in 8 times distribution. Let me just make sure I put in all the levels. So the simplest thing that Stadelmeyer, Dalton, all those guys said was you find a balance zone and you double it. But they didn't tell you that the balance zone is a cost basis. One, two, three, four, five, six, seven. They don't tell you it's a cost basis. They should. because now you know, now we're finding bids at 8 times cost basis. Now, why do I say it's 8 times cost basis? Because if you went and drew, right, there's the open. That's where I anchor VWAP. So if you go and you draw a volume profile, right? If I went and drew a volume profile here, you see the cost basis? It's actually a little bigger. I used a smaller, but you can see the cost basis is right here. So that's where all the inventory is priced. This is 2 times profit, 4 times profit, and now we're into 8 times profit. See? I like simple. You know why I like simple? Because when you're trading, you always get punched in the face. If you have a really complicated trade plan, when you get punched in the face, when something goes wrong, you start seeing Tweety birds, everybody panics, right? It's a real mess. So what I like is a trade plan that's simple, so when you do get punched in the face, when things go wrong, you know how to react, right? You know how to react, you know how to manage your way out of the trade. And the more simple your trade plan is, the more simple your execution plan is, then you'll be able to function when things go wrong. Because I hate to sound like a pessimist, but stuff always goes wrong in this business. That's why, like when you're doing deals, like when I do a deal, you always have contingency plans, right? So what happens if we pay this guy to bring buying into the stock and he doesn't? What are we going to do, right, to keep our investors from dumping the stock and crushing the price? Well, you got to have a backup, right? We always have to have contingency plans in this business. Where are my sellers? The sellers are here. Little distribution. Now, how much is that point of control? It's pretty big down there, isn't it? It's 1,158 contracts. Let's see if we can move that up here somewhere. Maybe down here in the 45s. Big ranges again in this crazy thing. Right? Because there's always something that goes wrong, right? It's guaranteed that something will go wrong. It's finance, right? That's why we all have heart attacks in our 30s and our 40s. Right? It's not a genteel business. There's always something going wrong. There's always somebody looking to put a knife in your back. Right? That's Wall Street. Right? Remember Gordon Gekko. If you want a friend, get a dog. Right? You guys should all watch the original Wall Street. It's cheesy, but oh my God, it's so true. You know, like all of those sayings, everything happens on that show. Like, the big client making the broker responsible for offshore trades, all of that stuff happens, right? It's like, when he's trying to buy Anacott steel, he goes, start buying Anacott steel at this price, use the offshore accounts, and keep it quiet, right? I was the guy on the other end of the phone. Okay, buy this, use the offshore accounts, keep my mouth shut. Got it. Very simple. But we always need an exit plan. So anytime you get into a trade, make sure that you have a way to get out of it. Right? So say you were shorting 66.50 because you saw a seller at 51.52, right? You see, okay, I'm short here. My stop is here. That's your exit, right? If it starts taking out the top of those candles, uh-oh, that's your danger zone. So you're short, say, at 49. Your danger zone is 50.51, and your exit's 52. So if the offer starts moving higher, okay, I know that this trade's probably not going to work. That way, you're not caught, and okay, well, there's a little position here, so if I'm short 50.49, I should put some 44.45 bids in to see if I can catch any product down there. Because if I can't buy it back at 44 or 45, well, then it means that nobody needs to sell it that low, and I need to raise the price that I'm willing to pay to cover my short, right? So everything we do is practical, right? There's no, I'll never tell you it's an art, not a science, and you just have to take the trade. No, there's got to be a business reason, and there's got to be an exit strategy, right? Just like when you get on a plane, the stewardess tells you where the exits are. When you get into a trade, you got to know where the exits are, because if the lights go out and it starts to get smoky in the plane, which it always happens in trading, you got to be able to find your way out, right? Now, longer term, we'll see what happens. You know, if we open if we open inside yesterday's range, that's pretty much business as usual, right? If we open underneath yesterday's low in RTH, that'll be a gap down, and you'll be looking for that 65.60 area, because that's where the position is from the overnight of Sunday. So you can see this position, distribution, distribution, sale, right? And then hopefully back up for the wholesalers. This is a wholesale business, my friends. It's a wholesale business, right? Just like any market, there are wholesalers and retailers. And the wholesalers are just trying to move size. They're having a good time tonight, right? I mean, if you were long a couple of thousand contracts, 96 to 6,600, right? If you were long size here and you're selling them all the way up, you're having a beautiful night. Where's all our Hawaiians? I hope there's no more flooding in Hawaii. Cisco, Dano. I guess they're all asleep. Hey, Dave. Yeah, this is really choppy. I wouldn't be trading this. That's why I've kind of been flapping my gums. Yeah, I try and distract people from trading when it's choppy. Uh, let's see. Any small cap traders out there? I wonder. Let's see if there's anything pumping out there. Whoo. Oh, it was hot yesterday. I still look under the sub $5 category. And what I'm looking at is dollar volume. Look at this MGRX 32 cents, $109 million worth of stock traded. How beautiful is that? Right? That's just liquidation heaven. And look at the activity in some of these stocks. 31-cent paper, 363,000 trades. That's participation. So it traded $109 million worth of stock. The insiders probably blew off 30, $40 million yesterday. 30, $40 million day is a nice day in liquidation town. All right. They're selling stock to you at 32 cents a share. They paid 0.001 cent for it. Not a bad deal. Now we're liquidating a little bit. Let's see if we can hold 66.40. So when the market starts moving down, what I'm looking for is I'm looking for that wholesale element to tell me, okay, JJ, there are buyers under 39. We're going to stop selling at 40. Or there's so much competition, we got to go hit the 39s because we have to sell cheaper. So there's 40 and 3/4. Let's see if it goes through it. So right now it's looking below 40 and 3/4. It has not failed, so there's no trade for me. If this next candle cannot get back up to 40, I'd be shorting 39.40, stop at 41, and then I'd go put some buy orders in here at 35, 36, 32. We should be able to take out this level here because there's inventory above us, you see? So that's a little liquidation. Watch as the market comes back up to 40. So if that seller is still there, right? If you're selling in this area, say you're selling 37. Oh, crap. I missed that. Oh, my God. I went to go sell 37 and it just dropped. I was too slow. Oh, that happens. Oh, man. That was lack of discipline. Should have been short 37, 38 on that move, covering the 34s. Just for 3, 4 points. That would have been nice. So, Moran, now you're looking for bids around 26. If we break that 30 area, so this is perfect. We had a nice distribution. Now we're putting it on sale, and if we have to really put it on sale, we'll come right down to VWAP, right? Oh, that would have been a nice 37 short. Too slow. Beautiful short, Murad. You got that. Nice. 39 to 34. Beautiful. Rock star. You guys have any questions? Let's see if there's a seller at 36. I'm curious. If we rip over 36 and go 37, 38, 39, that means someone's stuck short and they're coming in for size. Because right now at 4:30 in the morning, those are the only buyers. Good. 36 seller. Predictable. See? See how simple these candle charts are and how they can help you? Right? Say you were a scalper and you went long 32 and you know there's a seller at 36. Buy 32, sell 35. Right? Avoid the drama. Now let's see. The next seller will be up here at 39 and change, 39 and a half. There you go, Dave. Nice work. Quick in and out trades. That's what I want everyone to do at first, right? Now, once you start trading and you become consistently profitable, yeah, sure, you can hold trades longer. But let me do the old salesman technique. If I could show you a way to make $500 to $800 a day without your hair falling out and without you, you know, getting ulcers and getting stressed out, where you learn something, you do your work, you make your money, and then you go and enjoy your life, is that something that you would be interested in? Right? Or do you want to sit in front of a computer screen for 18 hours a day trying to grind out 3 grand and then losing two? Right? This way you consistently make a little bit of money every day, you make a living, and while you're doing that, you build your skill. It's not glamorous, but, you know, very few jobs are, unless you're a movie star. What does Adam Sandler say in Little Nicky? I ain't no George Clooney, right? So, you know, that's why it's nice to make a little bit of income. Now we're correcting inventory a little bit more. So they did sell it into it at 36. And okay, what we're also going to talk about, oh, I got to write this down. Something that we have to do is we have to take a look at some more advanced shorting techniques. And we're going to do that in today's webinar, right? So it'll be how to adapt to changing markets, and advanced shorting techniques. And that will also be covered in tomorrow's execution webinar. So a lot of people are asking, JJ, what's the difference between, I could just be on YouTube, and that's cool. We love you on YouTube. We love having you on YouTube. We want you to come in the room, not for the $19, right? But we want you to come in the room so you can, I'm going to try and do at least 3 webinars in the room a week. Tuesday and Wednesday, it'll be execution based for the newer traders. And then the Thursday webinar will be advanced trading techniques. For those of you who are trading $1 million accounts, we have a couple of guys in our, I spoke to one yesterday. Yeah, exactly. I don't want glamour, Like when you're 21, you want glamour, right? You want the Lamborghini. But at my age, I'm 58. I'm just curious. I think I got to find one of the kids in my building who owns a fancy car like a Lamborghini and go see if I can get in and out of it without embarrassing myself. Have to crawl out of the car like that old guy on YouTube. All right, we're coming in. Do we get a nice soft landing in VWAP? Yeah, exactly, Dave. Exactly. Well, so we corrected inventory all the way back to the close. We're underneath yesterday's close now. That's pretty much it for me this morning, folks. Thanks for coming out. We appreciate you guys being with us, and ladies being with us on YouTube. I'll be on again at 9 a.m. Eastern Time. And just to remind you folks, next week after the time change, my 7:30 becomes 2:30 in the morning for the New Yorkers instead of 3:30 because UK changes time at the end of this week, right? Just remember that. I'll keep talking about it so people don't miss the stream. Thanks everyone. If you need any help, reach out. I'm vwaptrader1 on X, and this is tradingsyndicate.org. And we will see you today. And remember, 11 o'clock, we're going to figure out how to trade this weird, strange thing we call a market and be able to adapt. Thanks, folks. We'll see you in a little bit. Bye for now. Stay out of trouble.